back to Indianomics. This topic we are discussing is the impact of President Trump's victory on Asia and India. I now have with me Jahangir Aziz, the head of emerging market economics at JPMorgan. Jahangir, thank you very much for joining us. First up, the big Trump campaign was to bring income tax to zero and fund the budget with tariff increases. To what extent will he implement this?
It's very hard to say how much of his campaign promises he will keep, but let us not forget that President Trump is someone who has broadly kept to his promises. So I think there are four separate areas where I think policies will be very different that affects the economy. I think one is obviously tariffs, the other is immigration, the fourth is fiscal policy, and the last is regulation. There's also a question about agency appointments, but that I think is somewhat less related to economics per se. It could be when the Fed comes up for, the three members of the Fed who are up for reappointment in 2026. We shall see how that plays out. But I think right now, I think it's broadly these four areas. So answer to your question, to what extent, I think there is a sense and a belief, not only by President Trump, because he's spoken about it a number of times, but in our own conversations, in things that the people around President Trump have been saying, there is clearly a belief that these are swappable things.
So what should Indian businesses be prepared for? Lower global growth? Or, in fact, are you also putting any downside risk to your India growth estimates?
So I think as far as India is concerned, it is not going to be in the line of direct tariffs, right? It is going to be indirect impact, and the indirect impact comes in two ways. One indirect impact is going to be that, dollar CNY, most likely, as was the case in 2018-19, will depreciate in response to whatever tariffs is imposed. Last time, 70% of the tariff increase. So tariffs in China were raised from 3% effective rate to 21% effective rate, and dollar CNY depreciated about 13%. So 70% of the 20% of the 17 percentage point increase, about 70% of that was in dollar CNY. So if that's the playbook, right, then it's a significant depreciation of dollar CNY that is probably in the making. PBOC will clearly not allow that amount of depreciation, fearing financial instability. So let's say we even go halfway through. Yes. Even halfway through is a significant won depreciation, which means that the INR will appreciate by exactly that much against CNY. And I think that the net trade impact of that is going to be significant. So that's the first part of it. The second part of it is that China will try to find other markets to where it will sell its products. That's what happened in 2018-19. And the places where China sold its products using its depreciated currency was emerging Asia. India was included in that, Latin America, Russia, etc. So I think that the two separate effects, right? One is, what do you do in the face of a 8%, let's say, I'm just making up numbers, we don't know what the exact numbers will be, of an appreciation of INR against CNY. We were already complaining about the net trade deficit with China. Imagine what will happen if you have a 10% appreciation of INR against CNY. So clearly, dollar INR will have to react to it. And then there's a second part of it, which is that to what extent China uses that to enter into Indian markets. And I think the combination of these two things is what India will have to contend as the first shock coming from the trade tariffs.
Okay, so just a final question. Does the space for rate cuts go down in India as well?
I think the space for rate cuts broadly in emerging Asia goes down definitely in the fourth quarter of this year. So all the rate cuts that we have in the fourth quarter of this year in several countries, I think they're pulled back. I think the only countries in which we would still imagine or think about rate cuts in 2025, at least in the first half, are probably Korea and to some extent India. And that is based on the fact that, the growth impacts, not just from the tariffs per se, but simply the growth slowdown that we are watching in high frequency data will probably get more entrenched as days go by. And given the fact that inflation seems to be coming back to normal levels, et cetera, et cetera, and the case for rate cuts in India had already been done some time back on a fundamental basis and held back only because of financial stability reasons. I think that probably will happen somewhere in the first half of 2025. But broadly, yes, the space for rate cuts becomes much less. Central banks all over emerging market world is going to face that. And, I think that much will depend upon what is the impact on growth. And just one last point on this, Latha, that if we go back to 2018-19, we focus on trade because it was tariff related, right? But that wasn't where the negative impact was. So if you look at what happened in 2018-19, so in July of 2018, that was when the first set of tariffs were imposed, right?
Yeah.
And if you look at where was the biggest reaction was on global business sentiment, including in India. Look at what happened to PMIs there. And then look at what happened to capital spending globally and in India. Both plummeted. And it wasn't till about the third quarter of 2019 that we saw some stabilization. And then, of course, we got hit by the pandemic, so we don't know where it went. So I think the biggest unknown is how business sentiment is affected and how capital spending reacts to it.
Okay, thank you very much, Jahangir. Out of time. The key takeaways from our economists, Jahangir says we must expect more of Chinese cheap goods coming in because of a depreciating yuan. And that'll be one problem for India. The other problem is likely fall in business confidence all over, and that affecting growth. So there are many points to ponder over after this conversation. For the moment, that's it on this edition of Indianomics. Thanks much for watching.